Welcome to part 2 on how to calculate return on real estate investment. What you need to know and the 2 different returns that matter to every single deal. Hey there, my name is Mike Fritz. I'm the founder of Titanium Capital Investments and the Multifamily CEO System. My greatest passion is helping people just like you create financial freedom with multifamily real estate. In this second part to a 3-part video series, I'm going to walk you through how to calculate your cash-on-cash return, because every single investor is going to ask you this, especially if you're raising capital for a deal. And even if you're doing this deal on your own, you want to make sure you can calculate your cash-on-cash return. But make sure you stick around to the end, because I have a free gift for you that'll help make this process so much easier. Let's get started. What is cash on cash return? Maybe you've actually heard that phrase, cash on cash return, but you never fully understood how that return was calculated, how you arrived at it, and what importance it had. Well, let me walk you through what a cash on cash return is. So a cash on cash return is simply a metric that tells us how much we're going to make while we own the deal. So here's how this works. We have NR divided by CN equals our cash on cash return. Now, what are these letters? I'm going to walk you through. The first one is our net return. This is how much money we actually have left over at the end of the month after we pay all of our expenses and we pay our mortgage payment, what is left. So you take all your income, you minus out your expenses, and then minus out your mortgage payment, and you have what we call a net return. So you take your net return, and this is the driving metric of your cash on cash. So you take your net return and you divide it by CN, or cash needed. Cash needed is how much money you had to put into this deal to actually make the deal happen. And cash needed comes from a couple different places. The first thing in cash needed is your down payment. How much money do you have to put down to make the deal actually happen? And not only cash needed, but you also have to add in your appraisal and inspection, any fees inside the property if you're charging fees to your investor, as well as your insurance, utility deposit if they're bigger properties, any legal fees, and closing costs. That's your cash needed. But you have to know that overall number if you're going to know the cash on cash return. Because what you're going to take is you're going to take your net return, whatever that number is at the end of a deal, and you're going to take your cash needed, and then you're going to get a cash on cash return. Now here's what these 2 letters represent down here. Your net return is a variable, your cash needed is a constant. And here's what that means. You only need your cash needed once. You put that into the deal once and you have the deal. So this doesn't really change. This is changing all the time because we should be increasing rent, increasing income, decreasing expenses. And this means we can actually see this number go up. So cash on cash return should be changing all the time because this variable is changing all the time. As this net return changes and goes up, this number changes. Or if the net return goes down. Let's say you come to a month and you figure out that the roof needs complete replacement. It's going to be a $25,000 hit to your bottom line. That's going to hit your net return, and that $25,000 is going to bring your cash on cash return down. And these kinds of things happen in properties. We have to kind of plan for them because things happen, things do need to be fixed, things do need to be upgraded. And so again, you take your net return and that's a variable. That's a good news, by the way. Because this is a variable, this will determine your cash on cash return. And when you're evaluating a deal to start, you want to try to get a feel of how variable this actually is. Meaning, how much can you actually push the income? How much can you actually decrease the expenses? And by pushing this variable and understanding a little bit of the spectrum of how much you can push this, you'll know how high your cash on cash return will go. Because one of the things an investor is going to ask you is, well, how much money does it make? Well, what does that even mean? That means how much cash on cash return is this bad boy pulling in? So every month, if I give you $100,000, how much money am I getting back month after month after month? And that is their cash on cash return. Because if that's really low, they might think, you know what? I should go over and invest in the stock market. It looks like I'm going to make more money in the stock market. But in video 3 of this 3-part series, we're going to go over how you can make sure your investors never go to the stock market because that return is going to make them way more money. Now, before I walk you through an example of what this actually looks like, if you want more content, how to land deals, how to find money, and start growing your wealth and retire in half the amount of time it actually takes, make sure you subscribe to our channel and join our family of people making a difference in their financial future and for their kids and their entire families. Make sure you smash that thumbs up button. We love to hear from our listeners and love to continue to grow our family. Turn on that bell notification so you get notified every time my crazy face is on a camera. So now what does this actually look like? What is this? These are just letters. What does it look like in my actual deal? So I want to walk you through a deal I've just accomplished and I just closed on 2 days ago, and I'll walk you through the return on investment. So the price of this property was 1.05, that's a 5, 1.05 million. So we paid $1,050,000 for this property. I needed to put into the deal about $391,000. So 391, what is that number? 391 I had to put into the deal. 391 is my cash needed. That's how much I needed to get into the deal. Now, what did that include? My down payment, appraisal, inspection, everything that was needed, my legal fees, my closing costs. I needed about $391,000 to get into this deal. Now, this deal is going to net about $49,000 per year. So $49,000 a year is what we're going to net off of this property. In part one, you remember, we walked through where these cash needed numbers come from, what's included, and also how we get our net return. So in this specific deal, we're gonna make about 49 grand a year. It's just over 4 grand a month. We also had to put 391,000 into the deal. That is a 12.5% cash on cash return number, 12.5%. Now, this is why we wanted this deal. It's a very, very, very good deal. And so we're gonna start at 12.5%, which is really high. You really want to aim to make sure this is in the 7 to 9 range, unless you have a really strong appreciation play in your property. Because if the value is going to appreciate a lot, you can accept a little less cash on cash return. But if you can't appreciate the value a lot, then you want to be really, really careful with low cash on cash returns, because there's really nowhere for you to go and make money. So first, you take your net return. Net return is income minus expenses. Take out your mortgage payment. What do you actually have left over? And then we take that number and we divide it by how much money it took to actually get the deal done. Now we have our COC, or cash on cash return. The reason it's called cash on cash, it's the cash we earn versus the cash we give. So it's cash on cash return. That's how that number is created. And so for you, when you're calculating your cash on cash return and talking to your investors, you need to know this number, because I assure you, any investor that knows anything about real estate is going to ask you this. And by watching this video, now you know how to walk through it and make sure you actually get to the numbers so your investors can feel comfortable. I also want to give you a free gift today that'll not only help you with your investors, but it'll help you find deals, find money, and continue to grow your portfolio. I have a free multifamily masterclass that teaches you the 5 upgrades to make sure you can get a piece of property in 71 days or less. Go into the description, freemultifamilymasterclass.com, click the link, and you're going to be taken straight to our 60-minute training. Make sure you check that out, and I'll see you in part 3.